You do not want to miss this episode. We're going to talk about, am I too old for the infinite banking concept? Hi, everyone. I'm Darren Mitchell at Control and Compound. Joining me as always, Christina Wyatt. Christina, how you doing today?
Hi, Darren. I'm doing great. How are you doing today?
I am doing great. Thank you. Very, very great topic today. I'm excited for this. We get a lot of questions on this. People are surprised by some of the answers. So I think we're going to have a great chat today about, am I too old for infinite banking?
Yeah, I think we're going to be able to answer a question that some people might be having out there. Now, before we dig in, I just want to remind everybody, if you're listening on your favorite podcast platform, please make sure that you subscribe and leave that 5-star review. And if you're listening or watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. And don't forget to follow us on our social media at Control and Compound on Instagram and TikTok.
All right. So, Christina, like a lot of people are different places in their financial journey, and a lot of times people, they get a little older. Sometimes have more, are further along in their financial journey and some more assets. Sometimes they don't, and they're looking to make corrections to make up for some of the stuff they didn't do when they were younger. So let's unpack this today and really dig into, first of all, like what is infinite banking. Let's do a quick review of that, and then we'll talk about how it applies to older ages.
Great place to start, Darren. What is infinite banking? So, infinite banking is a strategy or a concept, right? It's a strategy that we use to keep our money uninterrupted and compounding for our lives. And uninterrupted compound interest is amazing. We all want it. So, this is the strategy that we use to get it. Now, obviously, the sooner you start compounding, the better it's going to be, which is what leads some people to believe that it's not going to work for me if I'm too old because I'm not going to have enough time to compound. But today we're going to talk about why that just isn't true. We can use it for other things outside of the compounding. Compounding is great, and you're still going to have some with it, but there are other unique things that come with the infinite banking concept as well.
So when we talk about infinite banking, high cash value life insurance policies, there's two components to those life insurance policies, and there's the cash value that we talk about all the time: accessing the cash, growing your cash, being in control of your cash. But there's also a death benefit, right? And that's very important. And the older you are, the more relevant the death benefit is, because the older you are, the closer you are to death. So it's not a 80-year in horizon when you're looking at a death benefit. It's a shorter period of time. So when we talk to older people, well, if they have a bag of money, that bag of money is going to be left behind, and that money typically is split up to a big piece of it goes to CRA, and a big piece of it goes to your family or your charities. So one of the advantages of these policies is you can actually direct most or even all of it to your family or to your charities with a multiplier of death benefit, because that cash value is going to turn into death benefit when you die, plus the life insurance. So the question is, do you want to leave half your money to CRA and half to your family, or do you want to leave all to your family with a multiplier of this death benefit? The key is, a lot of people, still want to have access to it, right? We could buy death benefit and say you have no cash value, this big massive death benefit, and it's going to be great for taxes and great for your family, but it's not great for you because you give up control. So we can do that on a death benefit, but most people like still having control and access to their money. So what if they get sick and they're older and they want, home care, and they need an extra $50,000 a year or whatever it is? What if they decide, at 75 they want to buy a house down south and they want access to the money? So the idea is to keep having you access to that money that's going to continue to compound the cash value. But then if you don't end up spending it, it's all going to be paid out tax free. And you get sometimes, a state equalization. Maybe there's a child involved in the business and another child that's not. Well, a bag of cash can solve those problems. With insurance, it's going to bypass the estate. So you're not going to have, first of all, family fights over the estate, because if it's outside, if it's goes direct to the beneficiary, people can't argue in the will. It bypasses the will, so you don't have probate, you don't have those or you don't have those lawyer fees and accounting fees, and it's private. People can go down and get a copy of your will, but no one's going to know about your life insurance policies. It's completely private. So there's a real advantage on the estate value, but you're not giving up control in your lifetime. You still have access to that cash if you need it. So I guess the $1 million question, Christina, how old is too old for life insurance?
So with life insurance, there's two kind of people in or a couple people in the policy. You've got the owner and you've got the insured and you've got the beneficiary. So we're going to talk about the owner and the insured. A lot of people think that they have to be the same people. They don't, right? You can have an owner, a different owner than an insured. But let's talk about if you want to be the insured, because that's when the question's going to come into play. Am I too old for life insurance to be the actual insured person where the death claim, the death benefit is paid out on my death? So, for the majority of insurance companies out there, the maximum age you can be to be the insured is going to be age 85. So, 85. So we're not talking, 60s, 70s, you're good. It's 85 where you cannot be the insured. Now, you do have to complete a medical portion and get approved for it. So if you are a healthy 85-year-old, then yes, you can still be the insured on a policy, and that death benefit's going to pay out on your death. And you're going to have that you're going to have access to the cash. You're going to have all those things just like we just talked about. Now, if you are over, even if you're over 85, or maybe, you're older and you have some health conditions, well, you could go the route of being the owner versus the insured. And as the owner of a policy, you still have full access to the cash values. You decide on those policy loans. You have that control. Absolutely. The only difference is that the death benefit's not going to pay out until that insured passes away. So what older individuals will tend to do is start doing a generational wealth plan, right? And they will start insuring children, grandchildren, those younger individuals that have a ton of years for compounding, which is great for them. They will insure them. They'll have access to the cash when they're living, so they can use it for the and asset, just like we talk about, right? They've got their money in real estate, using it. And then what happens is when you're ready to pass down that policy, or maybe you wait until you die, you have it automatically roll to them, and it goes to, the next owner completely tax-free. And if it's a grandchild's policy, maybe you give it to your child as the owner, or if it's the insured's the child, you give it to them, right? So we've got a lot of options. It's not very like cut and dry. We're not going to be able to do this. You're over a certain age. We can, they're pretty flexible in being able to set these up and use the strategy. We don't have to be, you don't have to be a certain age. You don't have to be a certain health. We typically can find a way for you to be able to use the infinite banking concept.
Yeah, and people are surprised when we talk about this oftentimes, because they think, oh well, if I'm going to put it on my child, it's going to be my child's policy or my grandchild's policy. No, if you're the owner, you are in control of it. You can access the cash value. You could cancel it and take the cash. Like, you are 100% in control. You're just using that person as the insured, and that gives them no rights to the policy whatsoever. The insured can't decide to take a loan. The insured can't cancel it. The insured has no ownership or control over it. The owner has the control. And then the other thing, people always think, oh, but insurance is so expensive when I get older. I wish I had done this when I'm younger. And when it comes to these high cash value life insurance policies we use for infinite banking, that's just simply not the case. And I'll give you a simple example that's not accurate, and don't beat me up on this. But let's say you put $100 into a policy. Well, if say 90 or $95 of that is going towards the cash value, and a little bit of it is going to go buy a death benefit. Well, if you're 50, maybe you can only buy a smaller death benefit, but the full amount's still going to go into your cash value. And now if you're 30, well, great, the cash value is going to be very similar. Often we find cash values even better for people in their 40s and 50s than the younger people in the early years. But the younger person would just have a larger death benefit. So as far as cash value goes, you can be in your 50s, 60 or even early 60s and still have great cash value. My last policy I bought at 51 or 52, it works fantastic. We do policies people in their 50s all the time, because traditional insurance, if we were just buying term insurance, sure, that's going to be more expensive. But when we focus on that cash value, it really doesn't matter. If you're in your 40s, 50s, or early 60s, this can still be an incredible vehicle. And I have 8 policies, and I bought I think two of them now, and one of my spouse while we were in our 50s. So it's 50s is a great time to buy. 30s, 40s doesn't matter. All great times to buy like high cash value life insurance and implement the infinite banking concept into your financial plan.
Yeah, and if you're getting old, like I get the questions all the time. Like, I wish I would have known this 20 years ago. And from a 50-year-old, that's like, you're doing. I talk to people 20 years older saying the exact same thing, right? So the best times definitely now. But I've set up policies for people in their 70s because just like what you talked about at the beginning, Darren, like it's there and they are the insured because they want their money, not they don't want their beneficiary being CRA. They want it to go to their kids and they want it to go tax free, but they want to have access to it. So when you're thinking about it, like typically as you're getting older, we are having more conversations around the death benefit. I find when we're having conversations about infinite banking, we are talking more and looking at that side of the benefit and implementing into your planning. So it's not even so that do I do the policy on me as the insured or do I put the policy on my kid? A lot of the time, what it comes down to is you might even have a combination, right? You're going to set up a policy for yourself, you're going to set up a policy for your kids, your grandkids, because now you're creating that generational wealth and you're making a long-term estate plan for yourself, right? So I really do think that it works for any age on that side.
Yeah, I love that intergenerational wealth transfer. Like, I have policies on my kids, and great. So, at some point, if the parent dies and there's a big death benefit that's going to be paid to the kids, we'll get great. Guess what the kids can do? They can flow, a good portion of that money into their policies, and the kids' policies. Who's that going to benefit? Well, it's going to benefit the kids because they're going to have access to the cash value, but ultimately, it's going to benefit the grandkids of the original owner because the death benefit on the children is going to be paid to their children. So really, we're cascading wealth through the generations on a completely tax-free basis. And like when that death benefit starts kicking in, it's such a multiplier. If you do this for 2 or 3 generations, now your biggest concern is philanthropy because there's going to be so much wealth in the family. What do we do with it?
One other question I do get from individuals when we're talking about maybe starting policies a little bit later in life, a 20-year-old versus a 50-year-old is, at 50, you might be sitting on some cash at this point, right? You've got a lot of extra cash around, and I'll get the question, well, is there any way to like supercharge this or front load it? Can I get more cash in sooner? I don't have quite as much time. Can I speed things up at all? And some of the insurance companies will allow you to do just that. So it's neat. I do find, sometimes older individuals might throw some extra cash in the first couple of years. So they'll actually let us do larger deposits if you've got, some cash sitting around that you want to put into it the first year, but maybe lower the deposit the second year. Two of the companies that we work with will allow us to use a bit of a strategy with a term rider to get that extra room inside the policy for the first couple of years to get that room in quickly and get it paid up sooner. And having that money in there sooner obviously gets that compounding going quicker and can, fast track you to the number that you're looking for as well. So another option that individuals can use when they're getting their policy set up and they're starting their infinite banking journey.
Yeah, and I mean, you talk about sitting on a portfolio. I mean, we have lots of people that we meet with that are sitting on a portfolio. Let's call it $1 million, and let's say 30% of that is in fixed income and bonds, GICs. Well, that's fully taxable. Could be 50% tax they're paying on this. So just from an asset allocation standpoint, to say, well, why don't we take that portion that's in fixed income and we roll that portion into high cash value life insurance, which is similar to fixed income as far as returns, probably a little better returns, but tax free returns. And now all you're doing is reallocating your portfolio, a portion of it from a taxable environment to a tax-free environment, and then you have all those other benefits we talked about, right? It's going to grow tax-free. You're going to be able to access it. It's going to be a death benefit that's going to flow outside the estate tax-free with a big multiplier. So just from an asset allocation perspective, even if they never access the cash value or they never had to access the cash value, this is a great strategy, but it still gives you that option that if things change, right? Because the only thing we know is there's going to be more uncertainty. Someone's going to get sick, someone's going to get old, someone's going to need money, someone's going to change their mind and say, well, maybe I don't want to leave it to this person, I want to spend it myself. So it just gives you those options. So I guess to wrap up, Christina, Are you too old for this infinite banking concept or high cash value life insurance? And the reality is, if you're able to listen to this podcast and make a financial decision, you're not too old. I don't care if you're 90 years old. Maybe we have to use another person as the insured. If you're 50s, if you're 60s, we can put it on you. And it's an incredible strategy. Everyone is unique in their financial journey, and that's what we specialize with our wealth coaches, where we sit down and we dig into what are your goals, where are you now, where do you want to go, and how do we structure a plan to make it the best for your particular situation. So you're never too old for the infinite banking concept. All right, that's it. Thanks for watching. Thanks for listening. Hope you have a great day. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.